So today we're going to talk about 5 of the best BlackRock iShares ETFs right now to start your investment journey, based on my research of course, and these ETFs should make your portfolio pretty diversified in Australia as well as globally as well. Because if you really look at it, Australia is quite a tiny market when you compare it internationally. In fact, it's less than 2% of the overall global market. Hey guys, my name is Faizi and this channel is about finance and investing. Before we begin, this video is not financial advice. I'm not a financial advisor. We're speaking in a very general sense only. Please do your research before investing in any of these ETFs to make sure it's the right investment for you. Starting off with the first ETF, which is ASX IOZ. So IOZ is the iShares Core S&P 500/ASX 200 ETF, and as the name suggests, this ETF tracks the ASX 200 index in Australia. Now this ETF is very similar to the A200 ETF by BetaShares, and that ETF also tracks the ASX 200, but IOZ has a slightly higher management fee of 0.09% and A200 has 0.07% management fee, but at the end of the day, it's only a difference of $2 per year per $10,000 invested, so you're not really losing much money there. Looking at the performance of this ETF, we can see that the benchmark is the blue line and then the ETF is the green line, and this ETF has been tracking the benchmark really well. It's almost identical, which is what you want to see in an ETF. Some key facts for this ETF are that it's domiciled in Australia, obviously, because it's tracking the Australian market, and that just means that when it comes to tax time, you will not need to complete a US tax form, which just makes things easier at tax time. The inception date is December 2010, so we've got over a decade of performance returns available, but it's more important to note that a company like BlackRock has been around for over 30 years, so it's a pretty reliable ETF provider. And the distribution frequency is quarterly, which means that you're going to get 4 dividends per year instead of the usual 2, which is just a little bonus. So as you guys might already know, the ASX 200 comprises of companies which are the biggest and mid-cap companies as well. And some of the main holdings that we can see are CBA at nearly 8%. Then we have BHP and CSL at 7 and 6.12%. Then we've got a few banks as well. And then we've got Wesfarmers, Rio, and so on. Now, just based on these top 10 companies here, you guys can definitely see that the banks are given quite high weightings. And that's because the banking and financial sector is the largest sector in the Australian market. And that's because the banking and financial sector is the largest sector in the Australian economy. And this ETF gives this sector a weighting of 29.65%. Followed by materials at around 20%. Then you've got healthcare, consumer discretionary, and so on. So about 50% of our index is financials and materials, which might be pretty surprising to you guys. And unfortunately, a fast growing and exciting sector like IT is only 4.37%, which is pretty underrepresented here in Australia. Now, personally, I don't invest in the IOZ ETF. Instead, I buy the A200 ETF because it has a slightly lower management fee, and if you had to pick a choice, you may as well pick the smaller one, which has a slightly lower fee. But at the end of the day, it's really up to you because the fee difference is very nominal. But the other issue that we have when we try to invest in the Australian market is the fact that, like I mentioned earlier, we don't have too much exposure to technology. So what can you do? Well, other economies like the US have quite high exposures to tech because you have some big names like Apple, Microsoft, Amazon, Netflix, and so on over there. So basically all I'm saying is that you might want to actually look outside Australia and you might want to look in the US or somewhere else. So the second ETF on this list is ASX IVV. This ETF tracks the S&P 500 index over in America. And this index is one of the most quoted indices in the entire world, and the management fee is 0.04%, which is $4 per $10,000 invested, which is again very small. Now, looking at the growth and the returns for this ETF, we can see that since the 2000s, your money should have tripled hypothetically, and recently, as you guys would have seen, the S&P just crossed its highest level ever historically, so we truly live in just insane times. But guys, the standout thing for me in this graph is the fact that we can barely see the green line and we can only see the blue line, which means that the returns for the index and this ETF are basically identical, which shows that once again, this ETF has been tracking the index really well. Now, looking at the key facts for this ETF, we can see that once again, it's domiciled in Australia. So that means that you don't need to complete the US tax form. So once again, things are pretty easy when it comes to tax time. The inception date is May 2000 for IVV on the New York Stock Exchange, but it was only listed in the Australian Stock Exchange on October 2007, But either way, we do have 2 decades of performance data for this ETF. The distribution frequency is quarterly, so you get dividends 4 times a year, as mentioned in the previous ETF as well. Now, looking at the holdings for this ETF, and this is where things get pretty interesting if you compare this to the Australian market, because previously we saw in the IOZ ETF that basically nearly all the top 10 companies were banks and financial companies, but looking at the American market, we can see that most of these top 10 companies are just tech companies, because we've got Apple, Microsoft, Amazon, Facebook, Google, and all of these giants. And in this list, around 7 out of 10 companies are directly related to technology. And looking at the exposure, we can definitely see that IT is the biggest sector at around 27%. Then you've got healthcare and consumer discretionary, which is roughly half of IT. And then financials is only 11%. So this is why for me personally, I try to look outside Australia as well to get exposure to some companies and some sectors which are underrepresented in Australia. And by investing in the American market, you're getting access to some of the big names like we mentioned before. And because personally, I do think that the technology sector is going to only grow in the future and there's quite a lot of growth to come. Therefore, I think this ETF is a good choice for me personally. But once again, guys, make sure you do your own research. Now, we've looked at Australia, we've looked at the US, but we haven't looked at another fast-growing sector, which is Asia. So this ETF is IAA, which is the iShares Asia 50 ETF. And once again, as you guys can tell, this ETF tracks the top 50 companies in Asia. The management fee may seem a bit high at 0.5%. However, this sector of the world may have the ability to outperform the other economies in the short to medium term. So I believe that it is still worth looking at. Now, fun fact, guys, if you compare 5 years worth of returns for this ETF versus the IOZ ETF and IVV ETF, you'll find that this ETF has outperformed both those 2 ETFs. So, in my opinion, the Asian sector is still worth looking at. And as you guys can see, there are some reports where China will overtake the US as the world's biggest economy by as early as 2028. So, once again, do consider this area. So once again, as usual, looking at some key facts for this ETF, we can see that it's been running for over 10 years. They pay a semi-annual dividend, and once again, it's domiciled in Australia. Looking at the companies for this ETF, we can see a wide range of companies which you guys may have heard about or may not have heard about at all. We've got some familiar names like Alibaba, Samsung, and if we combine these companies with Tencent and Taiwan Semiconductor, we can see that these 4 companies make up nearly 50% of this ETF's overall holdings. So what do these companies do exactly? Let's have a look. So firstly, we've got Tencent Holdings. Now, this company owns WeChat, which is one of the largest social media networks in China, so they're pretty huge. Then we have Alibaba. Now, I don't need to introduce this one to you guys, they're pretty huge. And then we have Taiwan Semiconductors, and they create, as the name suggests, semiconductors, and they actually supply their semiconductors to Apple as well. And then we have Samsung, which you guys have definitely heard about as well. And then we have other companies which have drastically smaller weightings like AIA Group and Meituan, which is a shopping platform. Now, looking at the exposure breakdowns for which country you're exactly investing in, we can see that 43% of the ETF's holdings are in China, followed by Korea and Taiwan at 23 and 18%. Then we have Hong Kong and Singapore. So you're getting quite a lot of exposure to Asia. Now, there's a similar ETF by BetaShares called ASX Asia, and they also track the top 50 tech companies in Asia. So you might want to check that one out as well. And I've made a separate video which compares the top 4 Asian ETFs for you to invest in. There should be a link in description, and there should be a link somewhere on the screen as well. Now guys, before we go on to the 4th ETF on this list, if you are finding value so far, please leave a like and subscribe. It really helps out. Let's move on to the 4th ETF, which is ASX IEU. And as the name suggests, this tracks the Europe sector. Now, the fees for this ETF are 0.59% per year, which means that for every $10,000 invested, you will pay roughly $59 in fees. And looking at some key facts for this ETF, we can see that the inception date was July 2000, so it's been listed for around 2 decades, but it got listed in Australia in October 2007, and once again, it's domiciled in Australia and pays a semi-annual dividend. But looking at the underlying holdings, and I think this is where we will see the most difference when it comes to companies, and you might even see some names on here which you might not know about. So let's go through them one by one. So starting off first with Nestle, this is basically a food and drink company which owns Kit Kat, Nescafe, Milo, Maggi. So you've definitely used their products before, I'm sure. Then we have ASML Holdings, and they are basically involved in the semiconductor industry. Then we have Roche and Novartis. These two companies are both in the pharmaceutical industry. And then we have LVMH, which owns Louis Vuitton, Marc Jacobs, and some other luxury brands as well. But looking at the exposure breakdown, you guys can see that it's mostly made up of 4 European countries. Firstly being the UK at 23%, then we have France at 17.46%, then we have Switzerland and Germany at roughly around 15%, and then we have a few other European countries as well. Now the reason why you might want to get exposure in this part of the world is because these countries are very, very highly developed and they're closely integrated as well, and Europe has the 3rd largest GDP out of all the other continents, so it may be worth considering. So we've gone through most of the developing countries, which leaves us with emerging markets. This ETF is ASX IEM, and this is the iShares Emerging Markets ETF. And we can see that the fee is 0.68%. And the unique feature of this ETF is the fact that it gives you access to 1,000 companies with just one purchase. Looking at some key facts, we can see that it's domiciled in Australia. The listing date is once again in October 2007, and the distribution is semi-annual. Now looking at the holdings for this ETF, we can basically see the same companies that we saw in the other ETF that we discussed earlier, but when we actually look at the exposure breakdown, this is what allows us to get a true grasp of this ETF and have a look at what exactly it's tracking. So once again, China is the biggest economy here, so it gets the highest weighting at 37%, but then you've got economies like Mexico, Thailand, Saudi Arabia, South Africa, even Russia and Brazil. So it's really giving you that exposure, and in this video, no other ETF is this extensive when it comes to emerging markets. So if you really want to invest in developing countries, you might want to consider this ETF as well. So these were the top 5 ETFs in this video. However, when I was doing the research for this video, I also found some 2 other bonus ETFs that I think you guys should know about. So let's have a look at them. This is ASX IOO, and this is the Global 100 ETF, and it tracks the performance of the S&P Global 100 Index, which is basically giving you access to 100 of the largest companies globally. And looking at the holdings for this ETF, we can see the usual American companies, but then you have other companies like Nestle, Samsung, Toyota, Sony, and so on. Now looking at the exposure breakdown, we can see that most of the allocations are in the US at 71%, and this is pretty representative because most top companies are in the US. But then we also have the UK, Switzerland, and a few other European and Asian countries as well. Looking at the second bonus ETF, we have ASX IWLD, and this is the iShares World All Cap ETF, and they have a super low management fee of 0.09%. And the purpose of this ETF is to invest in the entire investable market of the world in developed countries only, so it's basically a developed countries ETF. And looking at the top 10 holdings, we've got some familiar American company names. However, if you look at the weighting, we can see that there is significantly less weighting towards these companies, and Apple, Microsoft, these are only around 3%, whereas with the other ETFs, like for example IVV, which tracks the S&P 500, these companies have a pretty high weighting. And having a look at the exposure breakdown, we can see that there is a lot more allocation in Europe, Australia, Canada, Japan, and so on. Now guys, I'm not telling you to buy any of these ETFs, but I do think they are worth looking at. Now guys, if you enjoyed this video, check out this one which explores the top 5 Vanguard ETFs for Australians, or this video which talks about the top 4 Asian ETFs to invest in to get exposure to Asia, which is a very fast growing region. Thanks for watching guys, please like and subscribe, and I'll see you in the next one. Bye now. But then we also